Welcome to the only daily podcast focusing on compliance news of the day. Each morning, start your day with a cup of coffee and Tom Fox, the voice of compliance, to hear about 4 of the top compliance, corruption, or leadership stories you will need to start your day. The Daily Compliance News is a production of the Compliance Podcast Network.
First, a word from our sponsor. The Daily Compliance News for January 28, 2021, the DeFi edition. We begin with that story from the Wall Street Journal. Mingi Sun reporting in the Risk and Compliance Journal, decentralized finance protocols are playing an increased role in money laundering, with the total value of cryptocurrency laundered rising in 2021 by over 30%. Cyber criminals laundered $8.6 billion in cryptocurrency, as reported by Chain Analysis. That makes up more than $33 billion worth of cryptocurrency has been laundered since 2017. DeFi protocol is an umbrella term for financial services offered on public blockchains. Received $900 million from illicit addresses in 2021. So more bad news for blockchain. Next up from the Wall Street Journal, U.S. sanctions on Russia will probably increase. As Tuesday, the Treasury Department said it was prepared to impose sanctions and export controls on critical sectors of the Russian economy. Senior administration officials said the U.S. could ban export to Russia of various technologies for microelectronics, and this will put more pressure, hopefully, on Mr. Putin. Next up, also from the Wall Street Journal, federal regulators proposed that measures that would significantly increase at the SEC's visibility into private equity funds is in the first range of plans to expand oversight of private markets. The SEC voted 3-1 to issue a proposal that would increase the amount and timeliness of confidential information. Private equity and hedge funds are required to report on Form PF. Obviously, this is a big change from where the SEC is now. The sole Republican commissioner pushed back on this, but the current SEC seems determined to put visibility into these markets going forward. So a big change coming. And finally, Myanmar poses extensive business risks. Extensive risks to businesses, the U.S. warns. The U.S. government has warned companies that face a host of risks should they do business in the country. Doing business with Myanmar's state-owned enterprises, including those that deal with oil and gas, pose significant reputational, financial, and legal risks, and financial institutions also have high risks. There are a growing number of money laundering concerns in the country. We recently had Total and Chevron literally pull out of Myanmar, and I think this is presaging a wider variety of pulling out from the country, and U.S. companies and indeed Western Europe countries are going to have to look at their risks in the country very closely to see if they can be managed with the obviously corrupt regime in place. The Daily Compliance News is a production of the Compliance Podcast Network and a proud member of C-Suite Radio. Thanks so much for listening. I hope you'll join me again tomorrow.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.